Nice. What's up, guys?
Loving it, man. How about you?
Nothing much. Jesse, there you go.
There we go. I think go up and running.
Have you noticed there's been a lot of jabs going around? A lot of like Army, Marine Corps, Air Force. I'm watching it. This is beautiful. We're short one person, right? Should be on soon. There he is.
There he is.
Don't say short because I'm only 5'4", but yeah, and the freaking somebody tagged me in. Oh, it's freaking Jason tags me in this little end on a freaking rook. And like, listen, in the Marine Corps, like the little end kicks ass, and I was a squad leader, so bring it.
You know that was funny though.
It was freaking hilarious. I loved it. I loved it. I was like, oh shit, you should see my thighs. Like, it's ridiculous.
Nice.
I'm not going to show you my thighs right now.
Damn it.
That's awesome.
Oh.
Yeah, Jen, are you a veteran?
I'm not.
So you're not going to get most of our jokes. They're going to be really off.
I actually do get some of them because I am married to one, so he says a lot of stuff. He's always out, and a lot of our friends are vets too.
Nice.
But not all of it. That is true.
All right, Deanna, are we ready to start?
I'm going to turn my lighting down. My head's shining.
You guys are up and you're ready to go.
Oh, so we're just sitting here talking, and all of EXP's watching us. Well, thank you everybody for joining us today. My name is David Kurz. I am a realtor here with.
Just remember that you guys are on a delay, so you are able to start your feed and your discussions right now.
Awesome. So I'm an agent here at EXP and also the co-chair for the EXP Military Network. I'm here in Miami, Florida. I served in the Marine Corps for 9 years. I'm going to be running this panel with amazing mortgage lenders and co-starred here by Jesse Grathoff. Jesse, if you want to introduce yourself.
I'm also obviously an agent here at the EXP. I am in South Carolina and in Tennessee. And just, looking forward to working on this panel and
also a member of the Military Network Board, which is...
Yes, definitely. I'm an Army vet.
Awesome. So we're going to go and reach out to our three lenders that have come on board with us. And look, what we're trying to do today is give you guys information on the VA loan. We're going to talk about the differences between working with veterans and non-veterans. We're going to talk about the differences between the VA loan and some more obvious loans like the conventional and FHA. We're going to debunk a bunch of myths. So we're going to have fun doing that. And we're going to hopefully teach you guys how to better use a VA loan to help veterans get into homes or house hack, which is one of our next classes coming up. And so I'll start the way that my camera's set up. Jen, if you want to introduce yourself, where you are and how long you've been in the business, and what percentage of your business is veteran based?
So Jennifer Kurz, I'm with Round Point Mortgage. I've been in the industry for about, I'm going to say almost 12 years now. And the percentage of veteran VA loans that I do, I'm sorry, I don't know why I'm nervous. I've done this before, but it's about, I'm going to say about 60% of my business is veterans.
Awesome, man. Leroy, same questions.
Oh, good gosh. Timeline 2009. Prime, I went from subprime to prime, which has been great. And so I am also a Marine. Semper Fi, we're good. We got two of us here. We're fine. And no offense, Jason and Jesse, but it is what it is. So, yeah, I mean, it's been a great experience, obviously. So I actually had somebody tell me 2009 I wasn't doing enough for the VA community. It was a fellow Marine. And so that really just ignited my fire to educate and, be an example in the industry for just education. And so it really lit a fire. And so currently 78% of our database and oral clients that we have are VA. So, or VA loans, I should say. So that just gives you a little insight. But man, what an amazing panel! Everyone on here is just amazing. So I'm excited to be here.
Nothing like another Marine to gut check you, right?
Right?
All right, Jason, same questions. Name, state, that helps also, state, and how long you've been in the business and what percentage of your business is veterans.
Sure. So Jason Sharon, Home Loans Inc. I'm a mortgage broker. I'm in Southeast, basically West Virginia down to Florida over to Alabama. So West Virginia, North Carolina, South Carolina, Georgia, Florida, Alabama. 65% of my business is VA loans. I'm the newbie here. I've only been originating for about 7 years. I've owned my own company for 4. I'm 65% VA. Retired Navy, spent 20 years active duty.
Nice. Well, thank you guys for your service, first of all. And now continued service to the community, because everyone on here said 60+% of their business is VA based and veteran based. So Jesse, I'll jump off with like my first original questions and then we'll just bounce back and forth if that's cool with you, man.
That works.
All right, awesome. So one of the things I want to ask right off the bat, who qualifies for a VA loan? Leroy, you can run with this, man.
Everything's going to go back for your time in service, right? So when you look at whether you're a reservist and you have that 6-year time frame, although if you are active duty or called to active duty, and we saw that in COVID, right? So, and Jason will have to back me up on this, is that as far as timeline, Title 10 orders, right? Or Title 32, in which you can qualify faster in that. But really it's 90 days of active service in a wartime position. And that's where you really have to dial in and ask your client and get vulnerable with them and say, where are you at in your process? Are you active duty, veteran? When did you serve? And then as long as they have that 90-day timeline in a wartime status, they're good to go.
And their separation matters, right? The type of separation they receive from the military matters.
Oh, absolutely. So I love this question, David, because there are times when we go through the military in such a stance, and this is so important for the veterans that are out there, is that they might be, maybe they didn't have a honorable discharge in the way that they thought. However, do they have general under honorable conditions? And that still qualifies them, given their time and grade, to be able to qualify. So even though that they might have not had the best experience, it's still an experience in which they signed their life to die for our country, which is amazing. And they still have that benefit. But on a dishonorable discharge, no, unfortunately, you don't qualify. However, there are parameters in which you can try to upgrade your status, and which is a lot. It's hard to kind of do, but when you look at it, honorable and under honorable conditions, general under honorable conditions still qualify.
Awesome, man. Jason, who can co-sign for a VA loan? Because I know there's a lot of veterans, maybe they need some help, but they're reaching out for mom, brother, cousin, or spouse. Like, who are the only co-signers allowed on this?
So anybody. So that's such a myth, such a big myth. Anybody can co-sign. Now, if it's a non-spouse, then it comes with some caveats, right? But generally, so as we all know, the VA doesn't loan the money, right? It comes from some lender, which comes from some investor, which sells it on Wall Street under Ginnie Mae coupons. What the VA does is it issues an insurance policy on that mortgage. It issues an insurance policy of 25%. So if that loan defaults, the lender is covered up to 75% of what it is. They're going to be covered. So if you have a non-veteran, non-spouse co-signing, then that person has a down payment of 12.5%. Basically, their share of the entitlement that's not covered by the VA. Can I add one more thing to Leroy's stuff? Because we get asked this a long time. It kind of goes hand in hand with this question. Is not only is the veteran eligible, if the veteran dies of a service-related illness or injury, their widowed spouse can qualify. Now, I bet you Leroy and Jen get asked every week, just like I do, can their daughter, can their cousin, can their son, get a VA loan on daddy's entitlement? The answer is no.
Unless they're a veteran.
Unless they're a veteran, sure. Absolutely. Yes, ma'am. But I just wanted to, so that if we could stamp out 5,000 of those questions in the future, that would be great.
I love it. Like if we could get this out now, it'd be great if you guys stop calling me every week with this, right? No, I love it, man. And then I kind of want to direct this question at Jen because she's the only non-veteran on the board. What do you find is the biggest difference between working with veterans and working with non-veterans? And I see your smile coming on because I see you hang up the phone, and I look at you when you hang up the phone. You're like, "Oh my God, this is great!" Like, talk to us about that.
So honestly, veterans most of them are straight to the point, with what they want. They definitely want information right away. A lot of them don't really know what their benefits are and what's available to them and up to what capacity. So definitely educating them on that. But when it comes to the delivery of our message and what we're trying to do for them, they want to know right away. And you can't, in more cases than not, it's best if you don't screw up on your information, that you're giving the right information because they will catch it and they won't want to work with you. They find it to be, I would imagine veterans find it to be like, like this person's messing with me. You know what I mean? Like they're not giving me, they're not truthful. And I think that's, they're not trying to help me, and I think that's very important. I think other people do feel this way, but veterans are very particular.
You find it easier to work with veterans and do VA loans than you do working with, let's just say, non-veterans and a conventional or FHA loan?
Easier, depending on the way that they obtain their income. But with regards to gathering information, they're very quick. So yes, on their delivery, how they work, how they function, I love that. If all of my clients were veterans, that would be amazing.
Awesome, man. All right, Jesse, you want to take off on some myths and tricks and good stuff like that?
Sure. Before I do that, I just want to point out, just from the realtor side, and David, this is something I think that you should, kind of input on as well, is like, from us, what is the biggest difference with dealing with a veteran versus a non-veteran from the realtor side? Because just like what Jen said, even on the real, from the real estate side of it, it is always just leading with that information. I feel like when it comes to vets, I have to put all the information out at the very beginning, at the very front of the conversation, what they're looking at, how they're going to go through it. And it is very like bullet pointed, checklisted. This is what this process is going to look like. And I feel like that makes it, makes the vets a little bit more comfortable. My traditional buyers, I feel like they're a little bit more, I don't know, they don't seem as concerned with getting that information right at the front. I don't know. Is that?
Yeah, I agree. That's very accurate. I know that non-veterans, I don't want to say it's easier, but I want to say that it's a little bit different in the way you approach the entire process. Definitely with veterans, like you said, want the information up front. They're very direct and to the point, like Jen mentioned. And truthfully, I enjoy working with veterans. I don't know. I'm a veteran, so for me, it's just it's the love, but at the same time, that instant connection that you have when you're up front, when you could bring the knowledge to the table, when you can educate a veteran, you're on top of the world, right? Because many veterans are getting out of the military with very little information. I don't think a lot of people realize this. Like, I know that there's, there are. They're what they call TAPs back in the day. I don't even know what it's called now. They try to transition us from being military minded to civilian. That doesn't work, man. You can't take the years that we put in and compound it into a 3-day program to then kick you out to the real world, right? And in that program, they throw in a little bit about the VA loan, right? And I served for 9 years. I didn't know what a VA loan was when I got out, okay? I mean, it wasn't until I was actually selling real estate that I realized, what a VA loan was and the benefits that were behind it, right? And even then, because you're military and that sounds like a military program, there's a certain level of distrust to it, you know? And from the military member, there's almost like, well, I don't know, man. Anything I've ever tried to sign up for in the Marine Corps, you know, like first thing we were taught in boot camp was don't volunteer, buddy. You know what I mean? So, you know, don't volunteer. You're gonna be voluntold, right? So and so now, you know, now you get out with this mentality of that, right? And so if we can come as professionals and step up to the plate and educate a veteran and say, hey, listen, this is what you qualify for. This is your right, right? And this is what's available to you. And by the way, it's going to save you a ton of money. You're not going to have PMI, like things I'll let you guys get into, but you know, there's so much savings that goes behind it. And I personally take things to another level because I talk to my veterans about, you know, filing claims for disabilities and so forth and so on, because in some states, especially like here in Florida, I don't know if it's the same everywhere else, but here in Florida, if you're 100% disabled veteran, you don't pay property taxes. That's a big deal to somebody, right? So like right now we have a veteran that we're getting under contract shortly. She waited to be 100% disabled, you know, to have that official 100% before she went to go buy a house, because for her, she said, I can get now more house for my money because I don't have property taxes anymore. You know, and that makes a huge difference. So it's just straight education, being able to educate. And that's kind of what I'm hoping we could spill out to everybody sitting and watching this right now, is to be able to take this, what we're giving them, and use it as like, you know, fuel to light a fire under all the veterans that they know.
So jumping off of that, I would love to jump in here. And so let's talk about some of that information and those requirements. I'm just gonna jump to Leroy on this one. I'll throw this one at you. First is credit score requirements and like debt to income, because as realtors, you know, we look at that, and I'm not gonna lie, my favorite thing is to be like, well, that's not, you know, I know basic guidelines of what you're looking for, but that's some information that you're going to want to talk to your loan officer. So what are they looking at on a VA loan, and what does that look like that's different maybe than in a conventional loan or something else, or an FHA? You know, what are those credit score requirements? How does that work? And then the DTI?
Well, and that's a good question. I'm gonna start. I'm just gonna kind of backtrack. Is that when you look at, like, you've got a full panel of veterans, and then you have Jen, who's an advocate, right? So I think what's important for the group or whoever's watching this is that because you're a civilian and you didn't serve, that doesn't mean you can't serve continually, because there's so many, I would say, civilians is what we call them, right, that serve at such a high level and understand, like Jen, who has the VA guidelines in and out. And so just because you didn't serve doesn't mean you can't serve, right? So I think that's crucial for all the agents that, you know, might watch this, and or lenders that watch this, is that your advocacy is really focused on serving the veteran at that point. So although we might have a connection vet to vet, right, no BS, we can do that. And it's an instant interaction, but that doesn't mean if you're a civilian, you didn't serve, you can't do this at a very high level to serve your veteran. So I wanted to just make that point. So when it comes back to, you know, the credit score, the 26-7 VA lender handbook, right? The handbook that all lenders, investors go off of, is there's a guideline. There's actually no credit score. And so there's really not a guideline on that. Now, that being said, because the VA does not lend the money, right? We have investors that lend the money. They're going to have what's called overlays. And overlays are basically stating that, hey, we're only going to lend at 660, right? So there's automobile associations out there that think that they do VA loans, and they're going to have a requirement of, say, 640. So at that point, you know, that's what their lender or investor overlay is. And so that's kind of how they underwrite it. But really, technically, there's not a score, but usually around that 580, 550 is going to be pretty much the cutoff. So my question for veterans out there would be, is that if you have a 550 or 580 credit score, what's going on? What's the circumstance? What happened in your life? Because your credit's reflecting some type of hardship in that circumstance. And so there's also what's called a manual underwrite, Jesse. And manual underwrites, and I've learned so much from Jason on this. He's like the master of manual underwrites, right? So manual underwrites, what those are basically you have two systems, right? So you have Loan Prospector, and then you have desktop underwriting. So Fannie Mae, Freddie Mac, and then if you don't get the automated, which is approved eligible, you're going to go into a manual underwrite status. So there are certain guidelines within the 26-7 where you have those guidelines in which you can have some flexibility. Debt to income ratio, right, can't be over probably 60% at that point. Front end ratio 41. Some lenders cap that at 43% on the back end ratio. So that, but there are circumstances or life circumstance in which you can create a letter of explanation and understand what's going on in the profile. Here's the thing. When you're dealing with the 26-7, when it really articulates what an investor wants to do for the VA to guarantee the loan, they really want to help the veteran to have home ownership. So if you have a home ownership and there are circumstances like, why did this happen? How did it work? How can we insure it? And how do we put more veterans in the home? And that's literally the guideline. So getting, obviously with the loan officer, everybody's going to have different overlays and investors to be able to sell to, or if you're on the retail side, you know, you have one investor that you're focusing on from a warehouse. But as a mortgage broker, you know, we have several different entities which have flexibility. So it's a case-by-case scenario, you know, going through, but credit score is really not a factor, but it's life circumstance and, you know, ability to repay.
Let's go into a quick myth, right? Because I've actually heard this out loud before, and I put it on my question list here. And I wrote, is it true that veterans use the VA loan because they don't have the money? And so they got to take advantage of this 100% loan, right? And so I put that out there because I've actually been told that on the other line. Like I've sent an offer, 100% financing, so forth and so on. And the agent on the other side says, well, is it because they don't have money? Do they have enough money to close? Can you guys talk a little bit about that and help me debunk this myth?
Hey,
Jason, go wrong with it, man.
I was going to say, can we throw that one at Jason? Because honestly, when I hear that from somebody, I'm not going to lie to you.
You know what's funny is I threw it to Jason because I could just see his face start turning red, you know?
So great question. And I do get this all the time. And I think that's one of the advantages of how I answer that to listing agents. Because I call the listing agents on every one of our offers because it's so competitive, and I'm sure Leroy and Jim do as well. It's if your loan officer's not doing it, find a new loan officer. But whenever I get a question, I'm like, yes, I use that as a talking point to build up the veteran. Like, yes, the veteran has sufficient funds to close. I would not have issued a pre-qual letter without that, but I'm sure other people in your past have done that. So I get the question. I said that's one of the beautiful things and advantages of a VA loan is they don't have to put any money down. Now, a lot of vets, I wouldn't say majority, but a lot of vets do have a down payment. I've got a veteran right now that's putting $100,000 down on a $400,000 house because he sold a house, he got $100,000, he wants to throw it in the house. So now he's 75% LTV, which is better than most conventional 10% down or 15% down loans. So whenever the veteran isn't putting any money down, that gives him or her more room if you have an appraisal gap, right? So let's say you've got a client of a conventional client that's putting 5% down, and that's all they've got is their 5% down, and now they still have to put down 5% and cover the appraisal gap. A VA loan is actually superior because chances are the veteran has more additional funds that they're not using because of this. They're getting a dislocation allowance because they're transferring PCS orders, or they're getting whatever it is. They're getting sign-on bonus because they're starting a new job because they're generally going to be a more technical job that they're starting, so they're going to have sign-on bonuses. So there's a big advantage there with 100% financing over a conventional 10, 15, 20% down.
And I'm glad that we brought that up because another thing that we hear is people haven't realized that the limitations on VA loans are a lot less right now, and they're becoming less and less limitations as we move forward, and people are starting to realize, holy crap, the VA loan's great, right? So can you guys touch a little bit about interest rate on a VA loan in comparison to some other loans, some other traditional loans. Also tap into VA appraisals, because that's a big one, right? That's another one. Like, you get the agent on the other side that says, man, I don't know, this VA appraisal is going to take forever. We're going to be sitting around waiting 30 days only to find out it didn't appraise because VA does low all the time. Like, can you guys touch on that a little bit? And I'll let you guys round robin that. Leroy, if you want to start, and then we'll go Jason and Jen.
And so 2-part question, VA appraisals. What was the other one? Marines. Like, what?
That's right.
Interest rate.
Like, so for instance,
interest rates. Yes.
Yeah.
Interest rates. So, when you look at it, it's so funny because like David, I teach a ton, right, in my local community and a couple different states I'm in. We talk about interest rates, right, because there's a difference in wholesale versus retail versus banking and or automobile associations or companies, right, that like to change their name and put veteran in it just to attract, leads per se, right? So, when you look at interest rates, traditionally you're anywhere from 0.5% to 0.75%. In my particular market, it's a full 1% difference in interest rates when you're looking at conventional versus VA. And so when you look at affordability, right? So I'm in Arizona. I live in Arizona. The average sale in Glendale, Arizona, Peoria, Arizona is about 404. And so 404,000, Jesus. And so when you look at that and you're going, wow, if there's an interest rate that's a higher percent. So if we're at, conventional at 5.5 or 5.25 is what some people are, and we're at more 4.5 on a VA loan. When you look at affordability, when you're looking at the VA loan, that 404,000 is now 450,000. That's a huge difference on the same payment, in which now, once you get up to that bracket, you have more affordability and or choices with lack of inventory, which is huge. So, I mean, that's just on the part. So as far as, that side of it, I'll let Jason take the next one.
Yeah, Jason, if you want to talk about the VA loans limitations, maybe caps, things like that, like talk about what limits the VA loan has and what limits don't exist, like that people think about.
So January of 19, the Blue Water Navy Act was passed, and that changed the VA landscape significantly. Before that, there was a loan cap, and if you went above that loan cap, you had a down payment. And as long as now with the Blue Water Navy Act, there is no loan cap as long as you don't have any encumbrances on your certificate of eligibility. So what that means is, as long as you don't have another VA loan that's outstanding, you don't have a VA foreclosure or VA short sale in the past. So if you have no outstanding VA loans, you can buy a house for $2.5 million, no money down. And I know Leroy's got, Jen probably has investors for a $2 million 100% financing loan. Now, if you do have an encumbrance on your certificate of eligibility, then your eligibility cap is established, and it doesn't have to be get updated every year because it's actually tied to the FHFA, Federal Housing Finance Administration number. And currently in 99% of America, that number is 647,200. If you're in a high cost area like LA, DC, New York City, it's something different, closer to $1 million. But that eligibility cap is removed as long as you have no current encumbrances.
That's amazing. And I'll tell you, I want to share with everyone listening, Jen and I had a client last year, and a Navy SEAL, retired, and he bought at $1.9 million, 100% financing, beautiful house up in Fort Lauderdale, Florida, 100%. So he's got no taxes in the upcoming year. I mean, like it's like win after win after win after win.
And I must add to that, because you were talking about how the entitlement, when it's taken, you can't really purchase up to that capacity. So his entitlement was actually I believe he had a short sale. So there was a balance to the VA. And what I had him do was pay that balance off because it was much less than him having to pay 20% down on a jumbo loan. You see, so for him, that was an investment that made sense. Not to mention that the interest rate is so much better than at that point than a jumbo loan. So I look at, even though the COE or the certificate of eligibility is showing that there's not enough entitlement, find out how much it is, and if it's something that they can take care of and doesn't make sense versus the alternative option of using a different loan, that could make a big difference.
That's huge, and that's where experience comes in, right?
That's
Jen,
right.
what about VA appraisal myths? What are some of the things that you've heard about VA appraisals, and what's your experience with them?
So with the VA, a lot of realtors think that the values are going to come in super low. What I will say is that we're in a market where there's a lot of sales happening already that have happened in the last 3 to 6 months, in which case they are going to use the best sales to compare to the property, just like any other appraiser is going to use. There's enough sales to get the right value for your home. So essentially you're going to battle this, whether it's a conventional loan and an FHA loan, because the sales are the sales within that time frame that they're going to use. That's one thing. The only thing is that the VA does have a 10-day time frame to be able to schedule the inspection, but once it's scheduled, it doesn't necessarily mean that they're going to take super long to provide us with the report. And again, it depends on your market, the availability of the appraisers, and their timing to be able to provide a report back, which again, we're also experiencing it with, for FHA and conventional as well. So it's going to be pretty much the same.
Jesse, yeah. Sorry, Leroy, go ahead, man.
Oh, I just wanted to hop into what Jen was saying, is that when we deal with the AMC, right, appraisal management company, so FHA and VA, they're regulated by this third-party service. And so this third-party service in my opinion, might offend a couple people on this one, is a money grab for regulation. Like 2008, you got this appraisal management system. The VA had it correct. And so everything is managed through the VA site. So when I think about or when I explain to a listing agent in this case, is that, look, it's documented, here's our turn time, and there's an accountability from the VA and what timelines are. So if it's 10 days in your area, it's 7 business days in Arizona for particular counties, and the cost is X, right? So in Arizona, it's $650 for a VA appraisal. So when we go outside of it and go to an AMC, that cost can get freaking wild. We paid $1,800 in Kingman, Arizona for a conventional appraisal that took 3 weeks. So mandating the timeline and expectation is the accountability within the contract to deliver on time. So that's what I love about the VA appraisal system. They have it right. And here's what's crazy, David, is that the VA takes zero money from the appraiser. So $650, that's going to the person that did the work, which is outstanding. So if you have a $650 conventional or FHA appraisal, maybe they get $400.
Yeah.
Nuts.
So we haven't even touched on the Tidewater RV stuff.
That's where I was just going to go. So this is something everybody wants to know right now, because just like you guys, I would say probably just under 70% of my business is veteran related, right? And whenever I present a VA loan or I present a vet's offer to any listing agent, I always have the same conversation, and I always start it with, I can prove to you that my VA offer is stronger than your conventional offer. And one of those things is this appraisal, and everything that we're discussing here, this is all great, and this is wonderful information, but I'm going to throw this at Jason, is what if that appraisal comes up short? What if it is just, it's not quite there, and the vet isn't going to pay that gap, right? Now, the likelihood is that the vet has a little bit of cash to cover that, but there are actually things that we can do with the VA loan that you can't do with other types of loans. And if you would address that, that'd be great.
Yeah, absolutely. So this is one of the biggest strengths of VA over conventional. Back in the 90s, I won't get too technical. There's a conference in the Tidewater area of Virginia Beach. That's what it's called, the Tidewater area. So they developed a procedure to make it more beneficial for vets on appraisals because they were running into issues. Jen is correct that the uniform standard appraisal standards are applicable for no matter what flavor of loan, FHA, VA, conventional, USDA, it doesn't matter. All appraisals have to use the same consistency and comps, adjustments, that type of stuff. So let's say the appraisal is going to come in low. The appraiser does not think he or she can find comparable properties that support the contract price. And it happens. It probably happens on 1 out of every 7, 1 out of every 8, one of my deals right now. There's a formal process they have to follow. They have to inform the lender that it's going to come in low. And they basically, the words they use, invoke the Tidewater process. That gives us 48 hours to provide to the appraiser 3 comparable properties in a grid-like fashion. If you need the grid-like fashion, I've got a PDF that I give you. Basically, it's like doing a CMA. If you can do a CMA, you can do this for the Tidewater. Basically, put in what properties they were, square footage, what the seller concessions were, the acreage, all that stuff in there, and then we give that to the appraiser. So, just right there, if we only stopped there, conventional, USDA, FHA have nothing like that. The appraiser, we're just as surprised as you are when the appraiser shows up. Whenever the number comes in low, the number comes in high, whatever it is, that's it. You could fight it. Chances are you're not going to win on a conventional USDA or FHA. For the VA, we send the comps to the appraiser, and then he or she has another day or two. It's not defined how fast they have to turn it to the time they get that to give us the actual appraisal. Now, they did not let us know, because what their opinion of value is, because it hasn't been developed yet. So people will gripe and complain of, hey, he didn't even give us a number. Well, yeah, because he hasn't come up with a number. He just knows it's going to be low. So we have the ability to sway, for lack of a better term. Can't say that we're trying to change his mind, but to give him more data of what the listing agent thought why they did this. So let's say that comes in and it's still short. Now, maybe it's not as short it was going to be, but let's say it comes in as still $5,000 short, $10,000 short, $40,000 short. Now we've got a second chance at the plate. Now there's what's called the reconsideration of value. So let me back up 1 second. The Tidewater process, I have a fairly good success rate with, but I could not say I'm batting over 500 on Tidewater. A lot of the Tidewater still come in low, and I'm sure that's probably Jen's experience and probably Leroy's experience. You still get Tidewater appraisals come in low on Tidewater. Now, next step after that is a formal reconsideration of value, ROV, reconsideration of value, submitted directly to the VA themselves. So depending on what region of the country you're in, you submit it to your RLC. For me, almost all my states are for Atlanta. So you send it to rlc@va.gov, whatever the website is, or whatever the email is, and you include a new grid, or use the same grid. I suggest using a new grid. Maybe there were closings that happened after the appraisal was done, and maybe there's a closing that happened the day after. Now you've got another additional data point for the VA to consider on that reconsideration value. And you also have a letter, and we usually help the veteran type it up, but it's got to be from the veteran. Dear VA, this house, 123 Main Street, I believe is worth X number of dollars. And here's why. This is why it's got a different square footage. There's comps in other neighborhoods that were used instead of a comp in my neighborhood. There is the appraiser has the wrong garage count. It's actually 2-car garage plus 4 parking spots instead of 2-car garage and no parking spots. So there's a number of different things that could be technically wrong with the appraisal, that if the appraiser did not acquiesce to our desires, that we can appeal straight to the VA. Now, the person at the VA has leniency to adjust that number by up to 15%. That's 15%. So let's say it's $300,000 house, they can go add another $45,000 in value if it's substantiated to the value of the house. And I'm batting probably 75, 80% on ROVs. Now, not every ROV comes in because sometimes they're just ridiculously bad listing prices because of the market we're in now. But as long as it's in the ballpark, the VA is charged with improving homeownership for vets. If you go to Chapter 4, it actually says use all the leniency, all the common sense you can apply to get veterans their home loans. So that's the main reason I think that VA appraisers are well superior to other types. Now, here's the pushback that you're going to get as a buyer's agent. Is you're going to get pushback. Oh, well, they're harder on the conditions of the house. So there are minimum property conditions for every single loan type out there. FHA has them, USDA has them, conventional even has them. Now, conventional is very bare bones, but all other government types, VA actually has less minimum property conditions than FHA and USDA. There's also the ability, just like you can appeal directly to the VA on value, you can appeal directly to the VA on a request for a waiver of a minimum property condition. And I've done that a handful of times.
Absolutely.
So that's some more pushback you're gonna get.
So what kind of conditions we talking about, Jason? And like when you say you've been able to, request waivers on a specific condition on a VA loan, can you give an example so people can understand?
Yeah, absolutely. So the most recent one was Tommy Bates. He was buying a gorgeous house out in the middle of nowhere. So as any of us would expect, you're probably going to have issues with the outside buildings, the sheds, the barns, that type of stuff. And there was a shed on the property that was completely dilapidated that I would not have walked anywhere near that thing because I knew I was going to get tetanus. That's how bad this place was. So Tommy called up a wood reclamation company, that goes and tears down things like that, and then makes tables, lamps, whatever out of that type of wood. And actually got a written offer from the company for $2,000 or $3,000. I don't remember the exact amount, but it was not chump change. A couple grand that Tommy was going to get after closing from this company for the wood. So I submitted that to the RLC with a letter from Tommy saying, "Hey, I want to close this. I understand it's a danger. We will not go anywhere near it. And the day I close is the earliest I can have this company come out and remove this. And not only is it going to be safe and secure, it's going to help the environment, and I'm going to make money off of it." And the VA's like, check.
That's great. That's great. All right, I want to touch on something because we don't have much time left. We got about I'd say 12 minutes left, and I want to touch on something important. What can you use the VA loan to purchase? And so I bring this up because people instantly think, a lot of people think VA loan, single family house, but there's so much more than that. Can you guys touch on that a little bit?
Sure. So you can buy up to, going back to the earlier question you asked is who can be on the loan. If you've got 2 vets on the loan, you could actually buy a 5-unit with a commercial attached to it. Now, I don't know of any investors that'll do that, but technically you could buy a 5-unit plus a commercial space on a VA loan. Now, is that going to happen? Probably not. There's certain requirements. You can't use the commercial space in the appraisal, that kind of stuff, but you technically could. So it's very common to buy duplexes, triplexes, quadplexes with 1 veteran on it. So if it's a single veteran, up to 4 plus a commercial space.
So I read something the other day. What about farms?
VA doesn't care. You may have investor overlays. You may have difficulties getting comparable properties that have sold in the last 12 months with similar size, similar structure.
So what I read,
keep in mind, go ahead.
Sorry.
Oh, you just have to keep in mind, it's going to be very housing specific, right? So when you're looking at farm situations, and I totally want to move to a farm, I want to get the heck out of Arizona at some point, but I got kids still, so yeah. But when I look at that transition, I'm going, man, could I buy a like in Alabama in the middle, or maybe South Carolina, because apparently South Carolina is freaking amazing. So I might be heading your guys' way, Jesse and Jason. So sorry about that, but I might be going that route. When you look at that, it's very structured focus, right? Housing. So if you're looking at a farm situation, you're not going to count like income from animals and those things. It's very specific on that. Comparables, like what Jason said, is that comparables in the area, rural, how does it work? Those types of things. Yeah, septic, well, road agreements, those type of other items that come up. But can it be done? Absolutely.
Yeah, see, and I love that because I think people intentionally put limitations without doing the research, right?
Yeah.
Like, people just, VA loan through rumor, but they don't go do the research. And,
so that's why we're in the situation now. We're having to have this discussion. And the question got asked, how do we win with a VA loan in this market? There's one education at a time, right? There's so many loan officers out there that do VA loans that aren't good at it. If you go look at Veterans United, last year they closed 88,000 loans. So that's probably 80,000 bad experiences that realtors have that we have to go overcome those 80,000 bad experiences by educating them with loan officers that know their stuff and realtors that are going to be advocates, just like we're advocates, and empowering the veterans in order to.
All right. So that's huge. So I want to go round robin on this. We'll start with Jen, work our way back to Leroy, and even Jesse jump in on this, but how do we win in this market, this current market? What are maybe just one or two tips that you give to the real estate professionals out there to win in this market with the VA loan?
Well, understand, I'm going to talk here because I used to be a realtor. I'm going to talk a little bit in that aspect. I understand what is happening with that one property, what the listing agent is looking for, communicate with that person, that would be a big deal. But know the program, know that with the VA loan, we've already spoken about the appraisals and the options we have to be able to increase the appraisal. Should there be additional value to be added to that property. Understand that it's a guaranteed loan as well, that just because they're coming in with zero down, it doesn't mean that they cannot afford to purchase that property, that now they just have more cash in their pocket.
Yep. Okay.
I'm going to mention the mortgage insurance aspect of things. I think a lot of people want to buy purchase a property with a conventional loan with 5, 10, 15% down, but they have mortgage insurance, so their monthly payment is a little higher, their interest rate is a little higher as well, and their debt to income ratio is more strict. So now you're comparing a more flexible guaranteed loan to one that is more than likely to fall apart if something goes wrong. That would be, just understand the program that you're dealing with, and your customer.
Huge. Appreciate that. Leroy, how about you? A couple tips you give to our agents out there.
One, God, I love that question. And as a freaking loan officer, right, I'm like, good God, right? Because we're like pounding the phones, trying to talk to agents. I mean, that's the reality, because we have this cycle of refinancing. And so, from teaching aspect is like, one, if your loan officer is not engaged and calling the listing agent, texting them, sending them video, right? Simple. Hey, this is Jesse. He's qualified for a VA loan. Absolutely phenomenal deal. We can close this transaction in 21 days. Not a problem. VA states 7-day turn time on appraisals in Arizona. So there's no questions. Give me a call. So that should be key for agents that are on here. If your loan officer is not engaged in calling the listing agent, texting, communicating via like video,
huge.
Get a new loan officer, or set the expectation of freaking engagement, right? So we got to do this. We got to win, because VA is the most powerful freaking loan that's out there. So, the other thing I would say is probably just like education, right? Because every single real estate agent, and I love this idea, and this is a Ben Kenny deal, right? Ben Kenny's like the freaking Yoda of real estate. So he says, every single agent starts with one transaction, one. So you can go from 1 to 600 transactions, right? So, but everybody starts with 1. So just be humble enough to be able to educate for loan officers and real estate agents that are coming on. If you know this lane and you understand the VA loan guidelines from your loan officer, which should be educating you on the power of the Tidewater, the ROV, 100% financing, right? So then they have the appraisal gap situation, which 25% of veterans actually come in with a down payment, and that's per Jenny May. Like Jen was saying, it's the most powerful loan in the process. 0.5% lower in interest rate. It's amazing.
I used to be a nuclear engineer in my past career, so I'm bullets, straight point kind of stuff. So whenever I get that question, I go over. I won't beat the dead horse. The appraisal, the underwriting is more flexible. The biggest thing that's a surprise, and I bet you I'm a surprise 80% of the people watching this, is a VA has half the underwriters that a conventional loan has. So you probably don't realize this, but PMI is from a separate company. So you have lender X that's underwriting the loan and lending on the loan. And then once that lender is happy, everything's done, we're quote unquote clear to close, that gets sent to the PMI company. And that's a whole nother company. That's a whole nother underwriter. That's a whole nother underwriting manager. So now that loan is going to get reviewed again by a whole nother set of eyes. VA doesn't have that. So you have half the risk of getting a bad underwriter.
Huge, man. Jason, I appreciate that. Jesse, a couple tips out to the agents out there on how to best use or present a VA loan in today's market.
So obviously everything that's been said here is super important. But the number one thing that I would say to take away from this is never assume that the agent on the other side of that deal understands what a VA loan is or what that process looks like. Yeah. It is our job to, one, educate ourselves, but to then pass that information on. Make yourself a cheat sheet. Make the phone call before you put in the offer. I do it every single time. I call and say, hey, listen, I'm about to send you over an offer. This is what it's going to say, and this is why it is a powerful offer. And just to give you a heads up to make your life a lot easier, my lender is going to give you a call in about 30 minutes to explain this even more in depth. And if you have any more questions, blow him up because he's really good. And that is what's like, I have that confidence. Now, I will say this. I've also worked with, Leroy and Jason's one of my preferred lenders. Like, it's in South Carolina, it's going in his direction. So, and I know with him and his team that they're going to get that phone call and he's going to reiterate all of those PowerPoints to that listing agent. So we're not selling a house. So we're working for the buyer. We're selling the VA loan to the listing agent and trying to get them excited so that they're going to sell it to their client and show them how powerful it is. It's like, this is a benefit to your client that I'm presenting a VA loan to you. And this is why. And that's the attitude that you have to present with it. Has to be, I have the strongest offer. Sometimes I've had VA offers get accepted when other offers are for more money, not like a significant amount of money, but it's a close, and we've won out because I'm able to sell that loan and that client. And, I just basically make that listing agent understand that it's the best case scenario for not only their client, but it's also going to make the listing agent's job a whole lot easier because this loan is going to close and they're not going to have to go through this process more than once.
That's huge, man.
I want to say one more thing. If you guys as agents, you're looking at the property at the MLS and it says only conventional or FHA, understand that if the property is a lot and block and it's in good condition, then it is more than likely that the VA financing could take place. Okay.
Yeah, that's a big one on the realtor side because a lot of realtors don't know the VA, so they won't check off the box that says we'll accept VA loans on this.
Yeah, and the only reason why I say this is because I feel like a lot of realtors limit themselves on what properties to show their customer because they're looking at what another realtor inputted on the accepted terms. Yep. So I think that's really important. And just because a property has termites doesn't mean we can't get through the process as well. We can also treat the property for termites and then get that cleared and move forward.
Awesome.
Absolutely. Good point.
Well, I'm gonna finish off with a couple of tips on me. And honestly, guys, if you're watching this right now and you're realizing a theme, right, on all the advice that you're receiving from all the great people on this panel. Number one is communication. I completely agree with Leroy, man. Communicate with the client, communicate with the listing agent, communicate, man, at a very high level, whether that means you're sending emails, text messages, video messages. I mean, I when Leroy said that, I just smiled from ear to ear because I send videos to everybody, you know. And second thing is tie your lender in on the presentation of the email, right, of the offer, right? So when you write that email, you say, hey, and my lender is following information is copied in on this email. If you have any questions on anything that we're talking about or the discussion we had on the phone or whatever the case is, tie your lender in on that so that your lender can be in cahoots. Gives them an opportunity to send a quick reply and maybe call them later on, right? But it gives them an opportunity, your lender, to give a quick reply and say, you know, hey, I'm looking forward to working with you. Yes, Leroy is completely 100%, you know, ready to go, and I'm ready to, you know, take off with you guys whenever, whatever lenders say, right? Number three, educate yourself, educate others, more importantly, right? So, you know, study this, man. Get in the go online, read, you know, go to verified websites, read, understand the process of the VA loan. Look, just go to Google and go veteran VA loan myths debunked or whatever. Google that, and so many articles will come up because this is a consistent and constant issue. Right. And so all these articles are going to come up, and they're just going to talk about all these great things that people are out there or all these horrible things that people are out there saying, and a lot of great advice it's going to give you. And that gives you the power, the knowledge, and the education necessary to educate the listing agent. And everyone on this panel has said it. When you get on the phone with the listing agent, explain to them, educate them, tell them how strong the loan is. Because if you're not doing that, then, you know, then we're just going to continue this horrible trend of not getting veterans accepted and approved. Guys, thanks so much for being on this panel with us. I just got the message that it's time to wrap up. Thanks for doing this with us. You know, hey, listen, super huge, man. This is so big. You know, we've got another panel coming up later with, you know, how to build wealth using the VA loan. And, you know, when we talked about what types of properties you could buy and duplexes and all that stuff. And, you know, it's just amazing stuff that we're giving to people. And thank you for taking an hour out of your day to give back to the community. We appreciate you guys.
Thank you.
Number 5.